So welcome everybody. I found this slide that had welcome in almost every language, but it was missing a couple of them, so I added it up there. So hopefully we got almost everybody taken care of there. I do always like to see where people are from, where they're logging in from tonight. If you just want to type in your city or your location, Montreal, 1 a.m. in Ireland, top of the morning to you. That's great. We've got Indiana, Austin, hey JP, very nice. Cave Creek, Nashville, Boston. I spent 5 years up in Andover, so I love that. Chile, yep, hey Anish. Chicago, California, a little bit south of us, and San Antonio, New York, Detroit, Pittsburgh, Ohio, Stockton, Montana, very nice. Up in Toronto, Colorado. Republic of Texas, nice. McAllen, Alaska, very cool, very good. Fort Worth. Actually, I went to high school at Southwest High School. They're up in Fort Worth. Yeah, so very, very good. Dubai, very nice. It's on my list of cities I'd like to visit one day. Pennsylvania, cool. It's always good. It's always just a very good mix. I like to say, yeah, my brother lives in San Antonio actually, so we'll kind of get down there and take a look. San Fran. Houston, Mumbai, very nice. I've been to Mumbai twice. Went over there to the Oberoi Hotel, and that was a really amazing experience. And Big Island, Hawaii, one of my favorite places on the planet. And Denmark, Sweden, very cool. Oh, awesome. Okay, so good group tonight, very good group from all over. So I'm just going to dive right in. So let's get going. So we've got an interesting market right here, and I always kind of like to get a sense of, especially in our trading room, just what the conversations are. What are people talking about? What's on everybody's mind? And it's in this rally has been, of course, unprecedented. We haven't seen this in such a long time, and a lot of people are kind of worried, and they're asking, and it's like, do we need any tools here? And it's like, magic ring, just buy the dip, Frodo. And that's something that's been working. But for anybody who's been trading for, longer than a couple of years, that buying the dip works great until it doesn't. And when it doesn't work great and you're fully invested and the market rolls over and dies, it can destroy your account. Okay. And we don't, obviously want that. So we just want to get a better sense of kind of what's going on out there. And for those of you that have been doing this for any length of time, the idea of learning how to trade, just like learning, any other skill set, seems like it's a similar path. So, okay, if you want to play tennis, you're going to take some beginner lessons, and then you're going to get a little bit better, and then you'll be an intermediate, and then, and then you'll be advanced, and it's kind of a straight line. And the reality of it is tennis, and especially trading, is more like this. There's a lot of fits and starts and different things like that. So what we want to find out about is that, and especially right now, because there's a lot of markets, there's a lot of charts right now that are extended, okay? And that's great that we can recognize that they're extended, but what we want to be able to find out is that these moves, these kind of out of the blue moves, is we want to see what they have in common when they're starting, right? So big moves, they are always obvious in hindsight, okay? Like after the fact, it's like, wow, that was a big move. But getting into them before the move actually starts and having the ability to hold on to them for the full move, okay, a calm and comfortable big trade, that's really the hard thing to do, okay? And that really is truly finding a needle in a haystack. And part of why holding on to a trade for such a long time and riding that winning horse right up to the finish line is difficult, because there are some times when you'll have a nice winning trade and it just rolls over and dies, and it can get very frustrating. And so you never know, which is the trade that's going to come up and then get killed versus which is the trade that's going to keep on going up. And we should have the confidence to hold on to that and turn it into a bigger trade. And so when stuff like this comes up, I always just start asking questions. And so, if only we could have a bigger degree of certainty that a big move was about to unfold in an asset class, and an index, and an ETF, and a commodity, and of course cryptocurrencies, which we're all having fun trading, or an individual stock, and have a bigger degree of certainty, and I could probably spell that right next time, when a move is about to halt in its tracks, or that we should lighten up on our positions and start to hedge and potentially reverse. Okay, so then the question is how would our trading day look? How would our trading month look? How would all of 2018 look if we could be pretty comfortable and confident about all that fun stuff? So that's what I call kind of the needle in the haystack. And you know, the reality of it is if you could just do, you know, one or two pretty decent trades a week, okay, and maybe it's a 30-minute move, or okay, it's a move that you hold on to for a couple of weeks. But it's those needles in the haystack that if you can just find those and isolate them and separate them from all the noise that's out there and focus on that, and then know when that the way that the market is giving you specific signals that you should be careful and you should be hedging, it would just make things a lot easier. So at the end of the day, it's all about a couple of things. It's all about knowing when it's okay to trade bigger size. Okay, these moments are rare. But when they're there, you need to be able to identify them and pounce on them. It can make or break your entire quarter or your entire year. So you just have to know what to look for, and then you have to nail the timing. And I'm trying to sneeze here, so this will be kind of interesting over the next 30 seconds. Knowing when to step off the gas and trade small, i.e. in the environment we have right now, so you don't piddle away your chips. And that's a very polite British expression for don't piss away your capital in a crap trading environment. Okay, hold on to that money so that when those bigger solid trades set up, you are psychologically and monetarily ready to participate. Okay, also knowing when you must hedge. That's probably one of the biggest questions I'm getting right now. Should I be hedging? If I'm hedging, what should I be doing? What are the things that I should look at? And then knowing what a big move in another asset class will do to your positions. And this is something that gets a lot of people, because right now there's like a bunch of squeezes setting up on the euro. Well, if the euro explodes higher, what is that going to do to your portfolio? Okay, if your portfolio is all tech, is that going to hurt it? If your portfolio is all transports, is that going to hurt it? And those are questions that in this environment we need to know. So what I found is that the best trades seem to happen out of the blue. Okay, hardly anyone sees it coming. In hindsight, it's obvious. Just like one of my trading mentors, Peter Borish, who is head of research for Paul Tudor Jones, said that, you know, first it's price, then the news. Okay, so first the move happens, and then the story about the move takes shape, and then it's obvious. Okay, well, in hindsight, we're not going to be able to make any money. We need to know and be able to identify when it's happening. Okay, so this begs the question, what do the best trades look like before they actually happen? So I think that's just an intriguing question. Okay, yeah, and we should be on the slide right now. You should see a volcano. Do you guys see a volcano on the slide? Just want to make sure that it's cruising along with you guys. Yep, okay, perfect. All right, so first, a squeeze. All right, so a squeeze. So this is not anything new. If you guys have followed me for any length of time, this is something that I've used forever. It's embedded onto a couple of different platforms, including Thinkorswim. You know, if you go to Thinkorswim and go to Studies, and then Add Study, and you'll see John Carter Studies and TTM Squeeze. It's in there, okay, and that's a tool that I like. So we want to start off and just make sure that you understand this, and all this is a way to pick up on a compression of volatility, okay, and these are the parameters for it. If you've got these red bands here, those are the standard Bollinger Bands, you know, setting of 2.0. Let's measure your standard deviation. And then you've got the Keltner channels, which measures your ATR. We set it at 1.5. And it's a very, very simple concept. When the Bollinger Bands contract to the point when they're trading inside of the Keltner channels, i.e. when the standard deviation contracts to the point that it's trading within the average true range, that is a compression of volatility. That's a buildup of energy, and we're going to looking for to release that energy. Okay? So same thing here and same thing here. Now, if during that time the momentum is above zero, when it pops back out, we can look for a greater than expected move to the upside. Okay, and in this case, each time it was to the upside. Obviously, the opposite can happen as well. All right, so this is a study. I use it all the time, and I love it. And we can see here what this looks like now is that when we do see the red dots, that's saying, hey, the Bollinger Bands are inside of the Keltner channels, heads up. Okay, so easy enough. Most of you, I think, are already familiar with this, and if you're not, it's a great tool, and I love it, right? So what I've recently discovered, though, is that not all squeezes are created equal. A standalone squeeze is sometimes good, okay, and sometimes not. And by a standalone squeeze, I mean you're watching, like, say, a daily chart, and there's a squeeze, and you get in it, and it's like, wow, that thing really took off, or that thing was not really that good at all. So sometimes it's really awesome, and sometimes it's like, eh. And so what I found is that the best squeezes have hidden allies and, okay, multiple heads-up alerts. So how do you think of that? So you'll say, here's a squeeze, okay, this is like the signal, but it's going to have allies on the higher time frames backing it, and then it's going to have alerts on the smaller time frames giving you a heads up that it's about to go. All right, so that's kind of the best way to look at it. So the right configuration of squeezes will result in a needle in a haystack type move, the kind that you only need to catch once a quarter if you understand position sizing and being able to hold on to a winner in order to have a great quarter. Okay, so that all being said, what exactly am I talking about? All right, so the next slide I'm on, and again, I just want to make sure you guys are following along. There's a nest with some golden eggs in it. And what I want to talk about here is multiple time frames on steroids, okay? And I've talked about nested squeezes before, and we even have a scanner that looks for 2 nested squeezes. It's a very simple concept. It's very powerful, and I want to expand on that. All right? Yeah, let me just double check. Can you? What slide are you guys seeing right now? I see a couple people asking which is the slide. All right, so most of you got the nest. Golden eggs. Okay, very cool. All right. And I'll kind of slow these slides down too, just so you guys can. For those, it sounds like a couple of you guys have some delayed action there. So you guys are gonna love this. If you like squeezes, you're gonna really like this. So this next slide here, it's VLO, and it shows 2 squeezes. Okay, and you'll see that squeeze number 1, it was a whipsaw. And the reality of it is, it didn't really work. So, here's a short signal, and, you get short, and then it's like you're suddenly stopped out. And it wasn't, it was a piss poor squeeze. Versus number 2, which is like, wow, you get in, you have no pain, it gets up to your, I like those 1272 and 1618 extensions. And those are the squeezes that I like. Okay. Those are the ones that make us money. And that's actually a small move. Okay. But it's a clean move, and that's what we want. Okay. That is what we want. Yeah. Hey, Daryl, I got a quick question. Do you think should I go and just share this actual screen or stick with the PowerPoint? See, it seems like a lot of people can see the slides, but some of them can't. Just wanted to get your weigh in on your opinion on that. And I'm going to just pause it here for a second and let people get caught up there. Or you may not have an opinion. Yeah, let me try something real quick, guys. Should be good. All right, see if that works a little bit better. Yeah, and Alan, if you can see the chart but not the squeeze at the bottom, there is I believe, a fit to screen little button in the upper right or left hand side there. Okay. All right. Perfect. Okay. So we're going to get to the fun stuff here. So I just switched slides, and now there's two charts. We got a weekly chart on the left, and we got a daily chart on the right of VLO. Okay. Now this is the basic concept of. This is a basic. Okay, perfect. So this is a very basic nested squeeze. Okay. So if you look at this, the squeeze on VLO that worked great, which was this one, is that you have a daily squeeze setting up here, and it's happening while a weekly squeeze has fired. Okay. This is called a nested squeeze, and it is very powerful. Now, they're kind of hard to find. It's useful to have a scanner. Okay. They're kind of hard to find that way, but when they do happen, they're very powerful. And you can see on the weekly chart, it was this period here that formed a daily squeeze here, and then this resulting, hey, if you're buying options when the stock's at 78 and selling them when it's at 82, your options are typically going to go up about 100% with that kind. So, that's a great, great trade. So those are the kind of things that are interesting. Those are the things that I like to see. Okay, and let me do this real quick. I'm gonna restart the screen share here. And so on that slide, you can see the weekly and the daily. Okay, and so that's the whole concept there of that weekly squeeze. And so again, it's very, very, very powerful. And it just kind of got me to thinking. So I'm going to switch to the next slide here. So now you guys should see three charts. So a monthly chart of VLO, a weekly chart of VLO, and a daily chart of VLO. And perfect. Okay, great. So on this, what you'll notice is like, wow, this is a nested squeeze. Okay, so there's a monthly squeeze and there's a weekly squeeze. And so when a daily squeeze builds up while those are happening, you get a very, very nice move. Okay, so this is one of those things. And when I see stuff like this, I go, gosh, that's really awesome. And, when I happen to come across it, when I happen to come across those, I like it. But the question is really, how can I find these more often? So this got me to thinking, which is usually a problem. First, I started thinking, are there hidden time frames, okay, or more time frames, like hidden time frames I don't normally watch, okay, or other time frames that I should be watching for squeezes, because it's hard to look at a bunch of different time frames at the same time. Second, how many time frames should I watch to grab hold of the biggest move? Third, how many squeezes is ideal? And fourth, what about heads up alerts? And again, I'm only thinking about here and talking about one concept, but when I just want to try to, if the stuff is happening, I want to be able to find it in an easy way, okay, so that I can kind of maximize this stuff. So because the whole point of trading is to, one, be able to extract money from the markets, and two, be able to take money away from the hedge funds that are out there. Okay, the hedge funds that are out there, they're running all these programs and stuff like that. But if we as retail traders can exploit our edges, which is liquidity, okay, and kind of finding unique tools like this that cannot be written in an algorithm, it gives us an edge. I want to exploit that as much as possible. So those are the kind of things that kind of get me excited. All right, so the next slide says other time frames. So as traders, we tend to default, or I tend to anyway, to the monthly, the weekly, and the daily charts for non-intraday trading, okay? But there are hidden setups on the following charts which I don't watch most of the time simply because I don't have enough room on my charts. There's a 4-day chart. Each bar is 4 trading days. A 3-day chart. Each bar is 3 trading days. There's a 2-day chart. Each bar is 2 trading days. And there's 20-minute charts, hidden day trades. And then 4 and 3 and 2-minute charts, which are good for scalping, but plus they're good for alerts. You know, if those are firing off and you've got a 30-minute squeeze that you're watching, and if those fire off long, guess what the 30-minute chart is most likely going to do? It's going to fire off long. Okay, and so all these concepts are great, but it's hard to do in an easy way. Okay, it's hard to look at in a very easy way. I'm not a robot. So for example, on this next slide, I'm showing 3 charts of XLY. You've got a 4-day chart, okay? There's a 4-day chart. This next one's a 3-day chart, and then there's a 2-day chart. And these squeezes here are beautiful squeezes, okay? But I never really noticed them because I don't have enough screen space to also look at those charts. Now, when I go, during this time, there was a daily squeeze. This daily squeeze is one that I ignored because it was so ugly, all right? You've got 2 dots here, then it goes green. And if you look at this daily squeeze, it fires, and then 3 bars later, it loses momentum, okay? So even if I would have gotten into it, I would have bailed, and I would have missed this move. However, had I known at the, you know, it's like, wow, it also had a 4-day and a 3-day and a 2-day squeeze setting up, I wouldn't have ignored that. Okay, and so that's kind of the concept. And I started asking myself, because, you know, I've been focusing on some tech stocks, and there's this huge move in the financials. It's like, all right, so what was setting up here that, you know, that was causing this to happen, and was it completely out of the blue? So what this got me to really thinking more and more, especially in this market, and especially going forward into 2018, is I'm not so concerned about catching every ebb and flow in the market, but I don't want to miss something that's so big and so obvious, and that after the fact, it's like I'm sitting there going, like, why did I miss that? Why is that something that I wasn't sure that, you know, that I didn't see before? So how many time frames should I be watching? At the end of the day, is it maybe going to be too many? And I do see a couple of questions where people asking, hey, how do you know which way it's going to fire? And we'll definitely get to that too. So then I started playing around. And I started looking at this monstrosity. And you'll see that, you know, I say, alas, this is too many, but it's amazing. So here's XLY, and you can see it's like, gosh, there's a monthly squeeze and a weekly squeeze and a 4-day squeeze and a 3-day squeeze and a 2-day squeeze and a daily squeeze and a 4-hour squeeze. My gosh. And when that happens, look at the move, okay? And these are the kind of things that I want to participate in. These are the kind of things that I'm willing to sit and wait for, and when the time comes, I want to dive into it. So I just kind of started going like, all right, how am I going to be able to do this, all right? And like XLF, same thing. I mean, you've got all these squeezes all over the place, but, you know, am I really going to be looking at 10 different time frames? So I was excited by this, but also a little dismayed. It's like, man, I already look at enough stuff. You know, I'm looking at my 10x bars. I'm looking at my RAFs. I'm looking at my multiple time frame analysis. How can I reasonably look at 10 or more charts like this and try to identify all these squeezes? So it really just came down to, as a human being, I can only process so much data. All right, I've got to compress the amount of data coming at me so I can make simple decisions. And watching 10 charts was pretty much ridiculous. And for a while, those 10 charts that I had, you know, I also had other indicators on it. It's like, really? So it just wasn't easy. And if I'm, you know, I like to do this where I get a concept that maybe is a complex concept, but we can make it simple and easy to follow. So that's when I called Eric. And I know, you know, Eric sometimes gets excited when I've got some ideas, and other times he gets maybe cringes a little bit. And I think this is one of those where it's like, you know, I'm kind of cringing. So we talked and we talked. We gossiped back and forth like I don't know like what, but it's, it's like one of those things like we get excited about, and let's dive into this. So I said, Eric, can I see 10 time frames of a squeeze and have it be quick and visually easy, and it doesn't become a data or a memory hog? And Eric, he kind of, yeah, that actually makes sense. Give me a week. And so a week later, he sent me a code, and I opened it up, and I saw this. And it's like, and it took me a second to get my arms wrapped around this, but suddenly what's happening here is I'm bringing up a 30-minute chart, and in the upper left-hand corner, I can see the 30-minute chart, the 60-minute chart, the 2-hour chart, the 4-hour, the daily, the 2-day, the 3-day, the 4-day, the weekly, and the monthly. And I can see immediately that there's squeezes on the daily chart and the 4-hour chart and the 30-minute chart. And this came up very fast, and it was not a memory hog. And I was like, oh my gosh, that is pretty amazing. And so this got me excited, and I started looking at some other charts and said, okay, so now if I go back to my 10 charts here, what I'm going to see is like, oh yeah, look, there is a squeeze on the daily and the 4-hour and the 30-minute. Now, if I was going, flipping through a bunch of charts like on a watch list, it would actually be pretty easy to miss this unless I wanted to take like 12 hours going through my watch list every day. So, now I'm looking at gold. Wow, look at gold. It's got a monster monthly squeeze setting up and a 2-day, which is, I consider it a hidden squeeze because I don't really look at that one, and a daily and a 30-minute. So when I look at something like this, I've got a potential huge anchor setting up. I've got an actionable signal setting up on the 2-day and the daily, and then I can watch the 30-minute as an alert. So if the 30-minute fires long, that gives me a heads up that these guys are setting up as well. Okay, so a couple of very, very interesting things there. So from there, and so good question. So how is this different from the MTF indicator? And we will get there in just a second. That's a great question. And then the euro is setting up here as well on a, and I took these today, weekly chart, 4-day chart, again, hidden one. I don't watch that, 2-hour chart in a 60. If the 60-minute and the 2-hour fire long, guess what the 4-day and the weekly are looking to do? Okay, so you've got a very, very powerful instantaneous look at a bunch of squeezes on 10 different time frames. So I thought that was pretty cool. So, but Eric, I said, what about the smaller time frames for people who like to day trade and for those early warning triggers and alerts? I don't want to miss those. If we're going to do this, then let's do this. That whole idea of go big or go home. And I did hear an audible sigh at the end of the phone. He's like, okay, what exactly? And Eric's, is amazing, and he can program almost anything like that. And he's going like, okay, this is going to be cool. It's going to be a lot of work. And I really thought that what I originally put together for you was really cool. But sure, let's keep taking a deep dive into this. And I was like, oh boy, let's do that. So what exactly are you looking for? So I said, look, I would like to do this. So here's 18 time frames from the monthly, the weekly, the 4-day, the 3-day, the 2-day, the daily, the 4-hour, the 2-hour, the 1-hour, the 30-minute, the 20-minute, the 15-minute, 10, 5, 4, 3, 2, 1. If we're going to do this, I would like to be able to see a chart and see what's happening on every actionable time frame, from the lower time frames if I want to scalp or day trade, or if I want an alert for a medium time frame, all the way up to the monthly. Can you do that? And he said, give me a week. And so as an example of this, so Red Hat, this was one that set up with multiple squeezes earlier this year. It had a monthly, and it had a 4-hour, and it had a 2-day, and it had a daily, and those all lined up together, and that was a pretty easy trade. I don't know if you guys remember that trade, but it was one of the easier trades that we've done, and these options went up nearly 100% in like, a week. Okay, pretty easy trade. And NVIDIA had set up with multiple squeezes, and this is one where it's like, okay, it wasn't looking for something to go really far, but I felt safe loading up on a much bigger size on this one in order to knock it out. Okay, and so it's things like that that I'm looking for. So Eric gave it the college try, and then he came back with this. And these are the kind of things that I kind of get excited about. All right, so check this out. So here's a 1 minute chart of Tesla. Okay, and on a 1 minute chart of Tesla, I can now go back and instantaneously get 18 time frames, and I can see, wow, the 1 minute, the 3 minute, the 4 minute, the 5 minute, the 15 minute, 20 minute, 30 minute, 4 hour, and daily are all in squeezes. That is something interesting that's setting up. Okay. And then I can also see that, yeah, these are not in squeezes and stuff like this. Now maybe this won't be a play that I like, but originally I see that there is something happening in Tesla. There is a lot of energy building up in Tesla on multiple time frames, okay? And that is what I want to find out. Where is the energy building up and on what time frames? If it's mostly on the 30-minute charts and below, great. That could be a killer day trade where I'm buying options at 6 and selling them at 8, and I'm in and out in a couple of hours. I can deal with that. Okay, if there's more setting up on bigger charts, maybe this thing's about to have a bigger move. But in an instantaneous moment, I can see what's happening on 18 time frames, and it just gives me a lot of cool information. Yeah, what he says, give me a year. No, so good question. So what about the 195 and the 78? So we tried that. It's harder with custom time frames, okay? It's harder with custom time frames, but this still gives me the information that I was looking for. Here's the NASDAQ futures today, right before this class started. So we've got squeezes setting up on the 20 and the 15 and the 10. So very interesting there. And then Bitcoin, so GBTC, this has been very volatile, and you can see right now there's no squeezes setting up, but I have been watching this, and when this does set up squeezes on multiple time frames, I can go into my Coinbase account and buy and sell there. So a lot of cool applications here, and Eric put a lot of work into this, and I just like the at-a-glance upper left-hand corner 18 time frames that I can kind of see what's going on there. So anyway, so that was the first thing, and I thought that was pretty cool. So long story short, yeah, in GBTC there's nothing happening. So when you see something like 18 time frames that are all green, there's no energy building up. So you just kind of wait. You wait for those energy to build up. All right. So long story short, I got really excited. So then, unfortunately, then Eric called me back and he said, "Okay, do you like that?" I said, "I love it." And he was about to hang up and go back to Freedom. And I said, "Hey, I like this. This is going to be amazing, especially for huge asset class moves." And I think you guys know this, but like if say you've got multiple squeezes building up on the euro, which there are, and that triggers, that's a correlated asset class, and that's going to impact stocks. And so if you see something like the euro or the yen or gold or bonds start setting up multiple squeezes, but the stock market is not, well, guess what? When those trigger, the stock market is going to get impacted, okay? And so it's things like that we want to know of. So he was trying to get off the phone, and I appreciated it, and I said, "Hey, I don't mean to be needy, but while we're talking, here's another tool that I think would really help, not only as we get into the end of this year, but for 2018, because we've got a lot of weird things going on in the markets." And he's like, "All right, so what are you thinking?" And I was like, "Well, I would like to know and have specifics, not guesses, but specifics on when to lighten up and start hedging." So this is a question I get, and a lot of times when I hedge, I do it by instinct, but I want to have a specific trigger that tells me you need to hedge or your portfolio is going to get in trouble. Okay, I'm like, all right. So he's like, okay, so what do we want to, how do you want to look at that? So we talked about some things back and forth. And then when we said, okay, well, if the euro is going to fire along, I want to know how exactly my portfolio is going to be impacted by that. So can you create some tool that'll measure the correlation and say, okay, if I've got like, say, Google, Amazon, NVIDIA, yada, 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 and the euro fires long, what's that going to do to my portfolio based on the correlations? He's like, that one's a little more difficult. But I'm like, well, can you give it a shot? And he's like, okay. So at this point, and I say he uttered a sigh, but I think at this point he started getting excited. He's like, man, this sounds like a great challenge. And I haven't had a challenge like this since I was flying F-18s in the Navy. Okay, so I think he was pretty excited. So he bounced some ideas back and forth, and he said, give me a week. So from there, so this is what I'm going to go through these fairly quickly. So average true range. For those of you that know average true range, this is a very common tool. It's available on any platform. And very simply, here's the average true range. I set it at 21 days. And it's just saying, like, you know what? The average daily range of the spiders is right now $1.38. So a move up $1.38 or a move down $1.38 is expected and normal. Okay? So ranges outside of that get a little sketchy, but you can expect on any given day that that's a range that it's going to trade in. Okay? The next part of this is that markets always, and if I didn't say it, I'll say it again, always revert back to the mean. To me, from a daily perspective, the best mean, okay, or average price, it always returns to the average price, is the 21-day moving average. Now, whether it's simple or exponential is not critical. They both work. They're both very similar. But you'll notice here, if we get too far away, we come back up. We get too far away on the upside, we come back down, okay? And you'll see this all the time. Whoa, bam. Whoa, bam. Whoa, bam, okay? And it's just a law of the stock market that a lot of people are either ignore or aren't aware of, okay? And so this begs the question that at what point, how far away from the mean does a market have to get before the odds increase exponentially of a reversion back to the mean, which is a way of saying you shouldn't be long anymore and you should hedge? Well, typically that ratio is 2.5 times the average true range, okay? So on the spiders, the average true range right now is $1.38. If you multiply that by 3, you get $3.45. And so if we go about $3.45 away from the mean, at that point it kind of runs out of gas and it needs to come back and check in with mommy. And that's kind of what I call it. You got to check in with mom, make sure everything's okay. Oh, now we're $3.45 away. Let's come back and check in. Oh, $3.45 away. Let's come back and check in. Okay, and it's not perfect, you know, this, and there's going to be times like this when you get a really big move, and this is why, you know, just because it's up here, and although there's times that when it is up here, I'll sell call credit spreads, but there's other times you got to be careful because it can keep on going, but you can see it eventually violently comes back. But why did it do it there? Okay, that's my question. Why, you know, here it came back and that's normal, but why did it do it right there? Okay, and you can see, of course, right now we're above that again. And so that to me started getting interesting, and we started bouncing ideas back and forth. If we're going to revert back to the mean on the daily chart, we're going to also revert back to the mean on the weekly chart and the monthly chart, okay? So if you look here on the monthly chart, the ATR is $8.25, okay? And so if you think of that 2.5 times ATR, that's like, what is that, 20 points. If you get that far away, you come back to the mean. On the weekly chart, $3.29 times 3 is $10. You get $10 away. You come back to the mean, come back to the mean, come back to the mean. So I was like, okay, so really what we got to consider here is there something that happens between the monthly, the weekly, and the daily charts when all three come together? Does that give us a tool that we could use to hedge? Okay? So the answer is yes. And so what we found is that while, you know, if we look at one time frame, it's okay, you know, sometimes it works, sometimes it doesn't. But if we look at all 3 time frames together, and if all 3 are at 2.5 times, the odds of a retracement increase exponentially, meaning that when that happens, you've got to know about it and you've got to take action and either lighten up on your portfolio or hedge. Okay. Again, when we look at 3 time frames here, it's kind of ugly. So I'm looking at the monthly and okay, here's Tesla and it's here and it's here and here. And so on this given day, within this given week, within this given month, it's all pushing through that 2.5 level. Okay. It's kind of a pain. So I was like, hey, Eric, can you just put an indicator on this so we can see it? He's like, yes. All right. So this is the top hat. So what happens here is Eric put this together, and you'll see these little pink hats here. I don't know what else to call them. Pink hats, seagulls, ducks. When that happens at that moment in time, okay, and this is a daily chart, that's saying that the daily and the weekly and the monthly charts are all 2.5 times the ATR based on those time frames away from the mean. And when that happens, it is very, very, very difficult for not only the whatever market it is to go any further, but the odds increase exponentially of a reversion back to the mean. And you can see here this thing got trashed, okay? This thing meaning Tesla. So what about the Qs, okay? So here's the Q. The Qs have had a great move this year. Here we have a pink hat, and it paused for a minute, and the daily dipped back down, but then we got a grouping of pink hats. Boom, we get crushed. Grouping of pink hats. Boom, we get crushed. Grouping of pink hats. Boom, we get crushed. Look what's happened the last 2 days. Okay? Boom, we get crushed. And so what we found is that, what we want to know is, look, when a market is rallying, we don't want to get out just because it's up on the idea that we're scared, okay? But if it truly has given us a signal that it's gone to a point where it's going to be extremely difficult for it to go any further, we want to know about that. We want something that's visual that we can see, and we want to be able to take action, whether it's lightening up on longs or at least having some hedges in place. Because when this happens, the odds increase exponentially, okay? Exponentially of a retracement back to the mean. All right, so suddenly these sudden sell-offs don't seem so sudden. Now, it doesn't mean that every time there's a sell-off, this is going to happen. There's going to be normal, stuff like that. But these represent extreme cases that I want to know about. Now, of course, we focus on rallies because a lot of the markets have been rallying, but it's the same thing on the downside. Here, AutoZone had been selling off and selling off and selling off, but when it finally got to a point where it's 2.5 times the ATR on the daily and the weekly and the monthly chart, we got the reverse hats, and that marked the low. And from there, we've gone from $500 to $700, okay? So I found this to be a very intriguing tool. It's a concept I had not used before, and I found it's much more powerful when you combine it with those time frames. Okay? Yeah, currencies are very, very good reversion to the mean type orders. Okay? All right, so I liked it a lot. So I thought that was really cool. And so as we were talking again, I said, okay, now look, if the euro spikes higher with one of those big needle in a haystack, multi squeeze plays like what's setting up right now, how is it going to impact my portfolio? And if the Qs are showing top hats, I also want to know how my portfolio will fare if it pukes so I can plan in advance and make adjustments if necessary, okay? And then, yeah, absolutely, that top hat works great with currencies. Currencies, when they do reach those levels, you'll see lots of top hats and reversions to the mean. It's also something I'm very excited about for Bitcoin. As we all have seen, Bitcoin had its first parabolic move, and think that we can start there's a lot of people out there that think Bitcoin is going to go straight up forever, and we know that the psychology of individual traders is going to come into play, and something like that that's showing that it's too stretched on 3 time frames is going to be very, very powerful, especially when we get that big sell-off in Bitcoin, which is going to come, and we want to be buyers at the right time. So I asked Eric, too, about helping me out with this portfolio allocation. And this was a tough one. So hats off to Eric on this one. This was probably the most difficult undertaking he took on this, and this is what we got. So here, we're able to look at this and say, okay, so we've got a top hat here in the Qs. So the way my portfolio is allocated, what's going to happen? So, all right, I've got my portfolio is 20% Apple, Amazon, Facebook, Microsoft, and Netflix. So if the Qs here go down, what's going to happen? Well, it's telling me that I'm 80% correlated to the Qs, okay? So if the Qs go down, my portfolio is going to get crushed. So, and this is good to know because if you guys have heard me use the term honey badger, right? That's kind of a stock that does its own thing. But this is telling you that none of your stocks are honey badger stocks. all of these stocks are going to move with the cues. And this is super, super important. You may have a stock in here that's not correlated to the NASDAQ. That's great. So when this thing gets toppy, you don't want to have stocks that are correlated to the NASDAQ. You want to have stocks that are uncorrelated to the NASDAQ. And you could also type in here the euro and say, okay, how is my portfolio correlated to the euro? Well, if it's 80% correlated to the euro and the euro is going to go higher, great. But if the euro is setting up a short squeeze, then you also need to reallocate. So what's great about this is you can now play around with it. So then you can play around with it when it's offline and put in some different scenarios and say, okay, well now because it's toppy here, I actually want to create a portfolio that's negatively correlated to the cues so that if it does drop, I'll actually make money. So in this case, I raised some cash. I bought some TLT. Some SQQQ, inverse there, JP Morgan and Disney and FXY. With this, I was able to create a portfolio that was negatively correlated to the cues. And again, if you're newer, I know this is an advanced concept. So if you're newer, don't worry about it. This is very, very cool in terms of being able to create a portfolio that could be correlated to a specific asset. Okay? So really, really cool on that. All right, so this really begs the question. Do you know how your portfolio will react if the cues tanks or if the euro explodes higher? Okay, remember all the squeezes on the euro right now. It's going to do something big. So this is a tool, a little bit more for advanced traders that can help you figure that out and make the necessary adjustments to your portfolio. And you can play around with different scenarios, tweaking them until you find what's right for you, then go out into the market and acquire those positions with the correct size you should be using. So, which is pretty awesome. So it's a really cool tool in that regard. So key points here. The multi-squeeze tool is great for identifying big moves in various asset classes or stocks, finding hidden setups with time frames that most people aren't even watching, taking data from up to 18 charts and making it easy to read and understand at a glance. And that's the key. As a human being, we can only process so much information, and we want to be able to process and digest that information in as quick and as simple a way as possible. Okay, and that Eric did an amazing job with that. And what's great too is it's a very easy tool for beginners and for beginners. It's like, hey, wow, there's 3 squeezes here. I think I'll buy the stock, or I'll buy calls, or maybe it's setting up to the downside, so I'll buy some puts or I'll short the stock. It's a super easy tool to use for beginners. And if you're intermediate to advanced, it's just a great tool to add to your toolbox. You get to look at 18 time frames at the blink of an eye, and it gives you so much more information. And then the top hat tool, it'll truly tell you when it's no longer appropriate to have a lot of exposure to a particular market or a particular stock. Okay, without it, it's easy to get out, and this is the hardest thing, to get out way too early. It's like, oh, I got out, but the thing's still going, or hang on way too long. And both are equally bad. You know, to hang on way too long and only to watch it crumble when you could have had all these little top hats telling you, you know, you really need to get out or lighten up or hedge. And then the correlation tool is certainly for more intermediate to advanced traders who are looking to fully understand how market moves in various asset classes will impact their portfolio, and then they have the ability to play with it and tweak it accordingly. Okay? So the goal of these tools is to identify the biggest, most powerful moves that are shaping up now and all through 2018, and to know when it is time to seriously lighten up or put on a hedge. And this is probably the biggest question I've seen this year, is when do you seriously lighten up or put on a hedge? And that's a specific signal to do that. And then as we head into 2018, these are the kind of additional pieces of information that'll give us an edge over everyone else. There's a lot of people coming on online in the markets. There's a lot of people coming on in the cryptos. And the people trading cryptos have no idea what they're doing for the most part. And these are the kind of tools that'll give us an edge over those markets. All right? So the goal with this, so hopefully tonight, you know, with the stuff that I showed you, that's all stuff that you can do on your own. Okay, so for the multiple squeeze concept, you can create an 18 chart layout in TOS. The squeeze is already in TOS, and you can do that right now. So hopefully, if that's something you want to do, it's great. For the hedging tool, you can put up that ATR. The parameters are 21 and 2.5 for the Keltner channels, and look at the daily and the weekly and the monthly. And when those all reach those levels at the same time, then you can, you can look at that. So you can, and then the correlation tool is a little bit more advanced, but that's all stuff that you can use. And as you guys know, we like to create tools. So we did create some tools with this, and we're going to have a class about them. So for those of you that are interested in taking a deeper dive, we've set up a class that includes these tools, and it's coming up on Saturday, December 16th. So for this class here, this is going to be on Saturday, December 16th for $497. We're going to do 6 hours of instruction. Okay, so from 10 to 12, there's going to be kind of an early bird bonus session for new people, and it's going to be Options 101, so if you've never traded options before. And then from 12 to 4, we're going to be going through deep into those multi-squeeze strategies, how to know when it's going to fire long, how to know when it's going to fire short, exactly what options to buy, how long to hold on to them, what to use for exits, okay, how to scan for this stuff, checklists on how to get in and out of those trades. So if you want to take a deep dive and get an advanced curriculum on that, that's what we're going to be doing that Saturday. And of course, it includes the indicator. Okay, so I'm going to answer some questions. You can go to simplertrading.com/ETF. You can call us here if you have questions, 512-266-8659. And we'll go through that. Now, real quick, I'll go through these. To me, this is this is an easy one. Hopefully you guys are all as excited about that indicator as I am. For the elite package, that also includes 3 days of live trading, plus it does include the top hat indicator, and then the master level includes the power correlations tool as well. Okay, and then we'll spend an hour on Saturday talking about correlations, and then we'll also spend an hour on Saturday talking about how to use the hedging tool outside of this. Hopefully none of that is too confusing. Okay, so let me just see what questions you guys have and anything else that you guys would like to look at. Oh, is the top hat a good time to sell credit spreads? Yes, absolutely. I think the best way to use kind of a top hat type indicator is you're long, you're riding that sucker hard, and you start seeing those signals, you get out and start selling call credit spreads. Yeah, so good question. So how is this different from the MTF indicator? Okay, so the MTF indicator actually measures an indicator called the TTM trend, which tells you whether that particular time frame is bullish or bearish. And so what the MTF does is if you're looking at, say, a 30-minute chart, it'll look at the 5 charts beyond that, the 60-minute, the 120, the 4-hour, and it'll also tell you if those are bullish or bearish. Okay. So what the multiple squeeze indicator does is says it's going to look back, instead of at 5 time frames telling you whether or not the trend is up or down, it's actually going to look back up to 18 time frames and tell you if there's a squeeze or not. So if you've got the MTF and the multi-squeeze indicator are a perfect combination. So that's the biggest thing. So the squeeze is telling you on which time frames volatility is building up, whereas the MTF is telling you is the trend on that time frame up or down. Can this be used somewhat as a potential trend reversal tool? And the answer to that is absolutely yes. So one of the things that you guys have probably seen in this market is that you don't see a lot of trend reversals, but as we saw with AutoZone, okay, it nailed a trend reversal, and it did nail some tops with some fairly violent reversions to the mean on the Qs, okay? So I do like it as a potential trend reversion. So we didn't have time to do this tonight, but this is something I'm going to talk more about on Saturday. It's a very useful tool also for sector rotation. And what you'll see is that when sectors get too extended, that also is an indication that they're overweighted and they need to underweight. And the actual sectors revert back to the mean much more violently than the broader based indexes. Yes. So Ron, good question. So I know a lot of people that will have, like, say, Schwab or Fidelity. So what do you do? So my suggestion is that you can, so TOS is a free platform. So you can, and we actually have a link that you guys can use with discounted commissions and stuff like that. We can let you know what it is. But what I would do is if you had Schwab and you want to stay with Schwab, that's fine, is you can open up a free TOS account. Okay, you get the free data, or you can like put in $1,000 or something like that. It doesn't cost you anything. You're just, transferring money. And then you get all the information and tools there, and then you can actually plug your portfolio in. So you can manually enter in your portfolio into that correlations tool. Now, if we could build it for Schwab, we would. Schwab's platform is hard to build for. So the good thing about this indicator, we were thinking about having it automatically extract information from your portfolio in Thinkorswim, but that proved to be too difficult. But two, what's even better, since it's a manual process, and it doesn't take long, you just type in, you got to type in the stock symbol and about what % of your account it takes up, and then you can actually see it there. So whatever platform you're using, you could certainly just, open up a TOS account and do all your calculations and stuff there. Yeah, no, Bill, so good question. So he's asking, how does this reversion to the mean forecast technique, top hat, relate to earlier statements that price being outside of the Keltner channels is stronger than the reversion to the mean? So in this case, what I found is that if it's only one time frame where we're out, like say we're just outside of the Keltner channels on the daily, that by itself is, that's not a lot of weight. But what I found is that if it's outside of 3 time frames at the same time, specifically the daily and the weekly and the monthly charts, that is a whole different ballgame. That is a whole different ballgame. How many top hats before you see an underlying puke? So when I see the top hats, it's a huge red flag. And so the first thing I do is let's say you've got 10 contracts and you're riding along and all of a sudden you see a top hat. I would immediately at least reduce my position size and tighten stops and then start looking at potentially getting short. And maybe you're long NVIDIA, right? And so it's like, well, NVIDIA is kind of doing its own thing, but man, the Qs here are extended. But then you can check in the correlations tool and say, well, if the Qs go down, what's NVIDIA going to do? Okay. And NVIDIA is like only correlated to 40% of the Qs. You can say, all right, but it just gives you information instead of having to guess. Man, the Qs here seem extended. I wonder if I should be careful here. It's telling you very, very specifically with a very specific data set that, yes, you really should be careful here. No guesswork about it. And that's what I love about it, because I want to avoid tools that are open to interpretation. So something like, wow, here's 18 time frames and 7 of them have squeezes. That's very powerful. There's volatility. There's energy building up on 7 time frames. Okay, that's not open to interpretation. If I see a top hat tool, it's very rare when you get a move beyond the 2.5 ATR point from the mean on the daily, the weekly, and the monthly at the same time. Okay, it's not open to interpretation. So that's what I like about it. And that's what I find is that by combining these multiple time frames, you're getting so much more data than if you're just living in one time frame. Yeah, great question about the 10x bars. So the 10x bars are a fantastic tool with this. So remember, what the 10x bars do is they help you manage a trade. So as an example, so if I see something like, okay, we've got 7 multiple squeezes here and I'm getting in and it's taken off. Okay, that's great. Well, then I'm going to switch to the 10x bars if you got them, and I can stay in that as long as that momentum is going. And typically what I found is when there's multiple squeezes like that, those 10x bars are going to stay green and show that volume. But at the same time, I can look and say, okay, if we're getting like a top hat, to be wary of that. So it's kind of like the multiple squeezes finds you the best entry points on the planet, and then the 10x bars are great for managing that. All right, let's see. Yeah, and so the correlation tool actually you can choose. So we right now have it set to measure back for 60 days, and you can change that. So as the correlation changes, it gets the calculation. So yeah, those calculations are not static. Do these tools work with the SPX index? Absolutely yes. So will any of this go into the scanner? So Brian, that's a great question. We always like to try to integrate as much of this stuff into the scanner as possible. The multiple time frame squeeze might be a little difficult. Now we do have it's just simply because it takes up so many time frames, and so that's part of what we're looking at. So we're not sure yet if we're going to be able to implement that into the scanner, at least with the current rendition of it. But it always gives us an incentive to, expand the server space, expand the technology, so that's possible one day. Yeah, so let me go over the other ones here real quick. So with the Pro package for $497, and I think this multiple squeeze indicator for most of you is like, okay, that's pretty awesome, and so I think this is the kind of the easiest thing to do. So you're going to have an interactive options basic course with Henry and Danielle, and this is really if you're newer. If you're not really sure what options are or anything like that, from 10 to 12 on Saturday the 16th, they're going to take you through it, so you're comfortable and you're up to speed. And then what I'm going to do is from 12 to about 4, I'm going to talk about strategy. Now the good news is I'm not going to be talking about any complicated option strategies. We're not going to be talking about butterflies or anything like that. If you're more advanced and you understand that stuff, that's great. But we're going to be focusing more on, hey, this is how we're looking for this stuff. This is how we're setting it up. This is how we know it's going to be something that's big and something that we want to participate in. And this is how we're using it with ETFs, with cryptocurrencies, and the different things that are setting up now. And that one's going to be a lot of fun. And of course, that also includes the indicator. So that one's, I think, kind of a no-brainer for those of you that like learning about this stuff. And then if you want to kind of up it a notch, the Elite package includes the top hat indicator, includes instruction on that, which we'll do later that Saturday, and then 3 days of live trading. Okay, so the Elite package includes everything that you see that's highlighted. And the live trading is always a lot of fun. If you haven't done it, I think every live class that we've done over the last 2.5 years, everybody in the class has made enough money to at least pay for the class. So that part, of course, is always fun. Because it's a very, very focused. And then if you are interested, if you're a more advanced trader and you're interested in that correlations tool, then we have the master package, which is $12.97. It includes all 3 indicators. It's going to include something like 8 hours of instruction on Saturday. So we go through all that stuff. And then, of course, the live trading and all that kind of stuff too. So as kind of a summary, it looks like this. You can go to simplertrading.com/ETF. If you have any questions, give us a call here at the office, 512-266-8659. And again, for the $497, you'll get the basic options training for those of you that are new. We're going to do 4 hours of instruction on how and different strategies for taking advantage of those multiple squeezes, and you get the multiple squeeze indicator. The Elite package gets all that, plus top hat hedging strategy, how to use it, the indicator itself, and 3 live trading sessions. And then the master includes all of this, plus the correlation strategy and correlations tool. So they're all going to be a lot of fun. I think you guys will really like them. And again, I'll hang out here, answer questions. And let's see what else you guys got here. Yeah, so that actually was Thinkorswim that I was showing there in the PowerPoint. And if you guys are in the room, I'll show you guys tomorrow too. I'll be using it in the room tomorrow and everything like that too. And this is recorded. You can go back and watch this later. So all the parameters and stuff like that too. Oh, good question. So when you get the top hats, do you expect it to revert to the mean of the daily, the weekly, or the monthly? Actually, the weekly. So the weekly becomes the target. So you're talking about a big move. Now, it's one of those things where it's like, you could take some off at the daily, but you're gunning for the weekly. Yeah, great question. 33 time frames. Okay, what else? Dr. Bruce, if your portfolio is in the 100 security range, can you reasonably use the correlations tool with individual securities, or do you need to do it with weighted sectors to reduce the number of entries? Okay, so that's a good question. The honest answer to that question is the most I've entered in there is 10. So I actually don't know if you can do 100. I can check. But of course, you just kind of hit the nail on the head. Is that you could do is like, okay, I've got 26% of my portfolio in tech, so I'm going to put in XLK. That, and so you could do that as well. So let me. That's a good question that I can double check with on that. Yes, absolutely, Stephen. Can we use the ES, NQ, YM, CL, 6E, ZB futures? Absolutely, yes. And for the futures, and that's really why I like those 1 and 2 and 3 and 5 minute charts, because on the futures, those are actually really, really good little pop type indicators. So yeah, all the futures work on that. The Bitcoin futures, as that comes online, and as more cryptocurrency ETFs come online, obviously you can do it with GBTC right now. So really a lot of good stuff there. Yeah, fireman's hat. I like that. We can bring the fireman's hose. Oh, yeah. So if you do want to open up a TOS account, okay, so if you do not have a TOS account, what's the easiest way to do that? You can go to, let me make sure actually I've got the right one here. So there's TOS. Yeah, we'll find that. Yeah, hold on just a second there. Yeah. But yeah, it should be simplertrading.com/TOS. But you can call us here too, and we can get you that information. All right, let me see what other questions you guys have. Well, right now right now because it's taken up so many time frames, I'm just looking to see if it's in a squeeze or not. But yeah, that's a great idea, and we can take a look at that too. Oh, when are the live trading dates? So the Saturday class is going to be on Saturday, December 16th. The live trading dates are December 18th, 19th, and the 20th. So kind of the week before Christmas. And I don't know if that's the best time ever to have a class or the worst time. I think it's the best time because I can just tell my wife, hey, sorry, I can't go out and go Christmas shopping because I'm going to be trading. And that way I can get all my gifts on Amazon. So, Tom, they're not part of Tastyworks yet. So we are in line though. So what I've been using is I use the tools on TOS, but then I'll still execute some of the trades on Tastyworks. But their main push right now is on the dev team. They're going to get options out on futures and all this stuff. And once they're done with that, then we are teed up to start getting some of our stuff in there. Yeah, Frank, absolutely. For the cryptos, I do see a flood. Think of it this way. Now, Schwab, I believe, has 7 million accounts. They're one of the biggest brokerages in the United States. Coinbase has 13 million crypto accounts. Think of all the people there that have no idea what they're doing. They're buying them, and they're going up, and they're saying, oh, boy. At some point, there's going to be more psychological-based trading activity there. And for those that understand how that works and can read some of these indicators, it's going to be easy pickings. Because just think about how many people that are brand new into that space have no idea about that. I mean, literally no idea. Yep, and it's even if it's a non-traditional market, because now the moves may be more exaggerated than we're seeing, like say in Goldman Sachs, but the same basis applies. Whoever bought on Monday at 11,300, were they panicking at 9,000? That kind of stuff. Okay. No, you know what, Dave? That's a great question. So for those of us that are working 55 to 60 hours per week, is there an option to just get the email or text that says the red hats are crowning? So we do it in our text alert service with our gold plan. That is something that I would like to include to say, hey, guess what? By the way, there are the top hats on there. That's a great question. And part of the reason I wanted to start the service is that I was trading as actively as I could while I was working 60 hours a week in corporate America. And this is kind of way before, all the internet tools that were available today. And so I know a lot of people out there, they're working a job and they like trading and they like the idea of the extra income that comes from trading. So how do we set it up so that's as easy as possible? So part of that is reducing the amount of time for research by providing cool tools that kind of bring it all together. And then from there, actually sending out useful alerts like that. And so, yeah, I think it's a great idea. Yeah, and Deborah, if you're not sure what to do, and it's like, okay, this looks cool, I would say start off with the pro, and then, we are going to have, there's some potentials to upgrade, and you can always upgrade like Saturday. Okay, if you upgrade now, there's some kickers like for the tax law selling class and stuff like that. But if you're looking at this going like, okay, I'm not totally sure, but this to me is an easy choice. And then go through the Saturday class and then just decide. And then if you want, you'll have the ability to upgrade there as well. Yeah, no, David, that's awesome. Well, for 2018, I'd actually like to set up, options account, futures account, and a crypto account. And so absolutely, I know, which I think 2018 is gonna be a lot of fun. Yeah, Brian, I hear you. So Brian's just saying, gosh, there's so many indicators, and as a noob, I'm overwhelmed. What indicators would be basic starters kit of indicators? So now I don't know if you have any of them or not. I don't know which ones you have, but to me, the core is the squeeze. You start there, okay? Now the multi-squeeze is awesome, but you got to understand the squeeze. And then from there, it's you got to have levels. So levels are a combination of Fibonacci, voodoo lines, things like that. Those I think are critical. And then you want to have turning points, RAF. I think from there, it's you want to understand like when to get out of a trade, so 10x bars. So you don't need everything, but there's if you're going to start with anything, you start with the squeeze, and you can kind of build from there. Area 51, great name. So in terms of incorporating into the scanner, the unknown there is just the capacity. So we'll create these indicators first, and then we see if we can get them into the scanner. If we can, we will. Sometimes it's just like, wow, that just takes up too much scanner juice. So for TradeStation radar screen, so at this point, I don't know. I know that's something that that's the kind of stuff that Eric will look at. So initially, we're going to have the indicators for TOS and TradeStation, and then it's like, okay, cool, we got that. Now, can these go into the scanner? Can these go into radar screen? And sometimes that's a much bigger project, but that's always stuff that we look at for sure. All right. Oh, the momentum oscillator? That was just literally the momentum oscillator. So there's a tool called momentum oscillator. When is the class for the power correlation strategy for the master package? Okay, so good question, and this is a little confusing. So all the classes are going to take place on Saturday, December 16th. And so this is how Saturday is going to be divided up. So 10 to 12 will be options 101. 12 to 4 will be Haystack, that's multi-squeeze, okay? And then this is the 497 package. And then the elite package, 997, is going to include an extra hour, 4 to 5, on that Saturday, where we're going to talk about top hats hedging. And it may last longer than that, but I think we only need an hour. And then the master class on that Saturday will also include about 5 to 6, where we're going to talk about correlations, okay? So so if you're in the master class, it's going to be a day from 10 a.m. to 6 p.m. if that makes sense. So we thought about swapping days and stuff like that, but initially we're like, well, let's just knock it all out that Saturday, and so that way we can do it. So hopefully that makes sense. A little confusing maybe, but that's how we're doing it. Do you think options and crypto coin will be too much to take on? So that's a good question. I would say with the cryptos, the main thing there is that, of course, there's going to be dozens, if not hundreds of these ICOs coming online. I always say, like, all right, hey, here's however, everybody's got different amounts to trade, right? So here's 30,000 I'm going to trade options with, and here's 30,000 I'm going to trade cryptos with. And if you're going to be trading multiple accounts like that, then your strategies are going to have to fit multiple accounts, meaning, don't scalp. Don't look at the 1-minute charts and try to catch every tick. That's going to be too much. But 30-minute charts, 60-minute charts, you can kind of sit there and ebb and flow, with options on NVIDIA, and, you're buying some Ripple and seeing where that's going. So just make it manageable, and that's the main thing. If, I trade multiple accounts, and part of the reason I don't scalp is I've got to make it manageable to trade like 7 accounts. If I was just trading one futures account, yeah, I could sit there and, crank out and scalp and stuff like that too. But there's a lot of moving parts, and so I adjust my trading style to take account for the moving parts. No, so good question. So can I use the credit for Tastyworks for this class? So the way the credit works is the class actually has to hit our store. So you can use the credit for stuff that's in the store. It does not work for classes that are happening in the moment. There's other reasons for that, but just I want to be clear and upfront with you on that. Okay. Yeah, FOMO. I think, cryptocurrencies, it's one of those things. If you're trading it, you're on the forefront of kind of what's happening. All right, guys. Well, let me leave this page up here, and again, I'll recap it real quick. So the class is Saturday, December 16th. The $497 package here, I think, is a no-brainer. If you're newer to trading, no worries. There's going to be some options basic, so you're up to speed. Then we're going to spend 4 hours covering all the strategies that I use with those multi-squeeze indicators, exactly how to use them, how to set them up, what to look for, what options to buy, what stocks to buy. We're going to be looking at ETFs and seeing if there's anything setting up in crypto coins. And then, of course, it includes the indicator itself. So that one's easy. If you're looking at this going like, this is awesome, I love the Haystack indicator as well, and you'd like to do the live trading, the Elite package includes all of this plus the top hat hedging strategy, the top hat indicator, as well as 3 live trading sessions. Okay, and that's kind of where the rubber meets the road. That's a lot of fun. And then the masterclass includes all of this plus the correlation strategy and the correlations tool. Okay, so I think this is going to be a lot of fun. I think this is going to get us really in gear for 2018. We're going to have the tools necessary to find those big trades, to know when to hedge, to not get too concerned if the market's going too far, because with the top hat indicator, we're going to know when it's gone too far and we can take appropriate action. We can find those big moves setting up in various ETFs and various asset classes and individual stocks at the multi-squeeze, and we can make sure our correlations are up to speed. Okay? All right. Very cool. All right, guys. Well, thanks for joining us. I will, Ron, that's awesome. Hey, this is great for revenge trades. I will leave this page up here for a little bit. We're going to be here in the office. You can give us a call if you have questions. simplertrading.com/ETF will take you to this page. Yeah, if you guys are, and I'm looking forward to it. This is going to be a lot of fun. It's going to be a great class. Obviously, I'm always interested in any of the tools that we're putting out, but these are really I think, going to make a really big impact in terms of knowing really which markets and which trades to focus on. Just that, those multiple squeezes. And then knowing it's like, okay, gosh, not getting out too soon, but also not hanging out too long. It's like, oh my God, I should be getting out here. I should be hedging because of the top hat, and understanding correlations if you want to get into that. So it'll be awesome. All right. Boom. Yeah, and if I didn't answer your questions, I apologize because there's a lot of questions. So, Paul, if you would like to ask that again, I will be hanging on here. Let's see. Oh, good question. How does the RAF entry differ from the top hat? So the RAF is an oscillator that is only, so the RAF is great, but it's only working on the time frame that you're looking at it. Okay. So, yeah, so which oscillator am I using for the squeeze? So that is the 12-period momentum oscillator. Okay, Paul? The 12-period momentum oscillator. So the RAF is only that time frame. So it's great for looking at those turns on a daily chart or a 30-minute chart. But it's not necessarily telling you like, hey, it's time to hedge or this is the top. The top hat is saying, hey, you know what? I'm looking at the daily chart, the weekly chart, and the monthly chart, and these are all coming together right now, and you need to be extra careful. Okay? So so the RAF is going to give you more signals and more turns, but when you see the top hat, you've got to really pay attention. Awesome. Okay, guys. And again, if you have any additional questions, let us know. Obviously we'll be in the room. The class is not until December 16th, so we'll have plenty of time to make sure that all of your questions are answered. And we'll go from there. All right, cool. You guys have a fantastic evening, and we'll see you guys at the next update.